Hello, ladies and gentlemen. Good morning from here, this part of the world, and depending on what time zone you are tuning in from, I wish you a good afternoon and good evening to you all. So excited as always to welcome you to our first edition of the this week's Forex Morning Mastery, as we will be going into the market from a fresh new perspective. And my name is Sheriff Daramola, and for the next 30, 40, 50 minutes thereabout, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. And the utmost intent, of course, is to look how to sniff through the chart using the historical data and the information we have gathered to strategically position ourselves for the next move. And so far this through the course of the weekend, there has been quite some new development which has been influencing the global market in one way or the other. One of which is the situation in the Middle East, where Israel finally retaliated and struck Iran, and this has further brought in some signs of de-escalation in the Middle East, as Tehran is seeing it as a limited damage. And of course, market participants are probably considering that the tension is not going to be as escalated as expected. And this lead to this sentiment, of course, has influenced the markets strongly during the last 6 to 8 hours, as we saw the US oil drop significantly to the downside. And we are going to be deliberating on this and taking all of these factors into account while we look at things from a technical standpoint. So as always, we are going to be monitoring three assets for this week, which includes the US oil spot, the USDJPY, and of course my favorite, which is the XAUUSD, popularly known as the gold spot. And trust me, I have some simple, insightful trading setups that we can bank on in preparation for this week. So you don't want to miss out on this one, as we have some insightful ideas to share. And for those of you who are joining me for the first time, you're highly welcome on board. The Forex Morning Mastery is an educational platform where we come together to have a deep understanding into the global market, and of course monitor the assets we're monitoring through the course of the week. So this happens 3 times in a week, that is Mondays, Wednesdays, and Fridays. And within these days, I usually give commentary updates on both my TradingView and Telegram platform. And if you have any questions, clarifications, anything whatsoever, feel free to drop them in the comment section. I'm here and willing to be of help in that regard. So good morning to you, Adeni Babalola. I just saw your comment right there. Trust you're doing very, very well. Glad to have you around with us this morning. So with that being said, here we will be diving right into the business for today. And of course, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market for this week. And you see, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, looking at the asset we are monitoring for this week, which includes the United States and the Japanese economy, we're going to be focusing on high impactful event from these economies. Now, in the case where we do not have any high impactful event, just like the first couple of days of this week, we will include mid-tier economic features so that we can have a broader view into what will be guiding the decision making in the market on that particular day. Now, looking at the economic calendar this morning, we do not have any high impactful events, so I had to include the mid-year. And looking at the mid-year, we have the unemployment rate data coming in from the Japanese economic docket. Now, this is a labor-oriented data, which is released by the Ministry of Labor, Health and Welfare in Japan, and it measures the percentage of unemployed people in the Japanese economy. Now, if the data comes in higher than expected, obviously that will be a weakness in the labor sector, which may influence the strength of the Japanese yen. So if it is higher, we expect the Japanese yen to drop, and if it is lower, we expected that there is a tight labor sector, and the traction will be in favor of the Japanese yen. And looking at what the previous data says, we had a 2.5% unemployment rate for the previous month, and market participants and economists are projecting that it will still remain the same. So we look forward to see what the actual data will be. Will it be just as market had expected, below expectations, or even beyond expectations? So the timing of this event is much more later in the day. That's about 11:30 p.m. UTC, 12:30 p.m. local time. So depending on your time zone, you want to be marking out the timing so that you do not miss out on that. So one thing about the anticipation of this event is that it will reflect on the chart as price action will evolve into a structural pattern that will give us an idea of what is likely going to be happening. Now, so this is the only event we're looking forward to today. So with that said, let's dive right into the chart and let's see what is going on from a technical and market driving perspective. So as always, the first asset, I see you, Jonah Aruna, good morning to you. Glad to have you around. So the first asset we are going to be taking on this morning is the US oil spot as always. US oil is the first asset we are looking at, and of course last week we had some interesting situations on these assets. We did bought and sold at some point in time during the course of last week, but at the end of the day we were able to grow our portfolio on the US oil spot. So today, what is going on in the market? Well, if you look at the structure, this week has started on a strong bearish note, as you will see that massive engulfing bearish candle that started this morning. I wonder what's wrong with my okay, hold on a second. I wonder what's wrong with okay. So you will see that massive engulfing bearish candle that sprang out about 10 to 11 hours ago during the Asian hour. And this for me is a very, very strong signal. And what could be the potential? What could be the reason behind this strong move to the downside? Will this be the platform that will dictate how price action will go for this week, or will it turn out to be a false impression which will trigger some buying platform today? Now, while I was looking at the market driver for US oil this morning, I wasn't able to find any driver that will favor the US oil so far. Now, one of the major ones which we have been talking about in the last couple of weeks is the geopolitical tension in the Middle East. But from the recent development based on the retaliation by Israel on Iran, where the Tehran government is considering it as a limited attack, it tells a lot about the situation. And of course, this has bring some easing tension between the Israel, Iran, and reducing the demand for safe haven like the oil, leading to low prices. Now, another factor behind the scenes that could have influenced the bearish sentiment in the market this morning could be the planned increase in oil production by the OPEC Plus. I usually call them a cartel, but I will call them a group, is adding to the supply and putting downward pressure on oil prices. Now, with the idea of planning to increase oil production by OPEC Plus, well, this could make the oil commodity surplus in the market. And our simple economics tells us when there is high supply, definitely price will drop to the downside because of the immense availability of the product in the market. Then the other factor we can also take into account is weak demand from Asia, most especially from China. China, who is considered to be the largest importer of crude oil in the world, and the demand in recent time has been very, very low. And this could be attributed to some couple of factors, like the emergence of consumers now adopting electric vehicle as regards to the normal locomotive vehicles, and the potential stimulation that the Bank of China wanted to insinuate appears to not have really gained some traction at this point. And of course, we saw the manufacturing sector from China last week coming in lower than market had expected, showing that there is a contraction in the manufacturing sector, which is usually tied to consumption of crude oil. So this is reducing overall global demand, actually, as China is known to take a chunk of the demand in the global market, and this could be contributing to lower prices. Now, taking all of this into account, with no major driver that could probably influence the sentiment positively as at today, the path of least resistance for US oil is looking to the downside. Now, with that said, now, how has the market participants, since that massive engulfing bearish candle we saw there, how is the market playing out around this whole structure? Now, for us to have a technical understanding into the current market situation, let's take an holistic perspective into this market. And to do that, we will scale up into the higher time frame. So I started this week analysis on the 4 hours time frame, and this is what I was able to come up with after taking into account the character of price action since the beginning of this month. Now, if you look at the structure closely, you will see that the month started on the bullish note. As you will see here, price started around the $70 mark. It rose all the way into the $78.50 level, and since the second week of this month, price had continued to nosedive, finding lower lows and lower highs in that regard. Now, in the last couple of weeks, we saw how sellers have found barrier around this area, as the inability of sellers to break through for us was a signal that buyers may likely be using that platform to push price to find new highs. So as a result of this observation, the first thing I did here was to acknowledge this demand zone that is between the $68.65 level and the $70 area as a area known to have a memory for buying power. So as a result of this, we have a demand zone in place. Now, the second thing we need to also acknowledge is the bearish momentum we saw since the second week of this month started. And look at what we have here. We have the beautiful descending trend line after capturing the series of lower highs. Now look at what happened exactly this morning. As soon as price tested that trend line, we saw this massive engulfing bearish candle to the downside, making things a little bit more bearish at this point. Now, to cap the whole structural detail we have here is our key level for this week, which is situated at the $70 area. Now, this level here has been a strong buying niche before this morning, and it appears we see price break down the structure today. And for me, the fact that price action has sliced through our key level and that demand zone, it signals a bearish opportunity. Now, how do we intend to join this bearish move? Do we need to wait for a retest of structure before jumping into the sell, or will this turn out to be a false breakdown that could incite a reversal setup? Now, in order to navigate the structure, we would need to scale down into our 1 hour time frame, our execution time frame. So we would like to see price action do a retest of structure, maybe on a long-term perspective before joining a sell. So let's scale down into the 1 hour time frame. Now on the 1 hour time frame, you will see what I noticed here. This is what I first of all captured this morning. I first of all captured the range price action has been this morning, and we can see price started around the $71.60 level, dropped into the $67.80 level before we started seeing that consolidation phase. And of course, you know, when we see a range bound structure like this, it's a beautiful signal that there is an indecision going on in the market at that point in time. Hence, we want to exercise patience and allow buyers and sellers to finally make a directional decision. Now, with a range bound structure here, which is between the $68.85 level and the $68.35 level, you know how we do it. We wait for price to either break out of the resistant line of that range bound structure to give us an opportunity to buy, or price break down the support line of that range bound to give us an opportunity to sell. So with this understanding in mind, and coupled with that strong engulfing bearish candle we saw this morning, I was able to take on a sell, have a breakdown of the $68.35 level. Hopefully this will continue to the downside. Currently I have about 25 pips running in profit at this point. And if you in any way are taking advantage of this opportunity based on the our analytical approach we adopt in this community, well done. Kudos to you for seeing that structure. So hopefully we hope price will go further to the downside. It's still not yet cast in stone, and the reason why I'm saying this is the fact that the $67.80 level became a barrier this morning. Now, not until the $67.80 level gets broken to the downside can I really feel comfortable in the sell position. So at this point, I will suggest that moving stop losses to entry point, securing this position, so that the worst case scenario that will happen if buy pressure resumes all of a sudden is going to be at break even. So if you are taking advantage of this opportunity, move your stop losses, secure this current position right now. So we shall continue to monitor price action from here. If the momentum continues to the downside, like I did say, a breakdown retest of the $67.80 level would have taken out the buy positions from here, giving us confidence to add more sell positions to our existing trade. Then another thing I would like to say here, which I didn't buttress on earlier, is that we could still see the potential of price coming back to retest the structure. So if it does, please do not ignore the potential of joining a bearish move had the appearance of continued selling pressure below the structure on our lower time frame. So as at this morning, we are going to be maintaining a bearish bias. And why is that so? We've talked about it. The strong engulfing bearish candle we saw this morning, sentiment is leaning towards easing concern in the Middle East. We have OPEC plus production increase, and we also have a weaker demand from the Asian countries, most especially China. So the path of least resistance remains to the downside. So breaking down of that 68.35 cents is all we need to feel comfortable in a sell position. Now, in as much as we're looking out for selling opportunities, we're talking about selling ideas here. You know how we do it in this community. We also ensure that we keep a balanced approach to our analysis. That is, buyers may also come into play, and if they do, what are the conditions we want to see on the chart that will make us feel comfortable buying the particular asset we are looking at? Well, for me to buy this asset, I would rather want to see price take out the resistant line of this range bound structure, though we have the potential of buyers coming in again. around the $67.80 level, which was a barrier earlier today. So if price comes into that structure, monitoring that area will help us understand what is going on there. So if we see buy pressure resume around that area, maybe when we scale down into our lower time frame like the 5-10 minutes, the emergence of any form of reversal setup right here on the lower time frame could give us some short-term trading opportunities. So if price breaks out of the neckline, we can place a buy. And please note that while we're buying, as soon as price moves significantly in our favor, ensure you move your stop losses accordingly. So between here and the resistance line is about 90 pips. So for short-term traders, for day traders, it's still a significant amount to inspire taking a buy from that particular area. Now, if this happens and it goes ahead to break out of the $68.85 area, then I will feel comfortable buying the US oil spot. So pending that time, we maintain a bearish bias at this juncture, and let's see how the market will react to the $67.80 area. And if there is anything new that comes up along the line, definitely I will keep us updated on my Telegram platform. So this is my simple view on the US oil spot for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any questions. And I just noticed a descending trend line here, which we can also use to navigate this current downtrend scenario. So as long as price remains below that descending trend line, we will feel comfortable in this sell position. Now, a breakout of the trend line definitely will begin to shift our idea from bearish to bullish, but I will definitely update us accordingly. So this is my simple view here. If you have any questions, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before moving on. All right. So in the absence of no questions, I want to assume that we are all on the same page. All I've said so far has been clear. I see your comment, Wokocha Kingdom. Good morning to you. Wokocha, I trust you're doing very well. So the bearish momentum continues to get stronger. So let's see how the sellers will react to that $67.80 level. A breakthrough retest of structure will further confirm more selling opportunities, but the appearance of buy pressure here, that is, if sellers are finding it difficult to maintain momentum below that structure, could welcome short-term buying opportunities. So let's see how that is going to play out going forward. So with that said, we will be moving right into the next financial instrument on our watch list. Stay tuned in. Yes, the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. And what a wonderful moment I'm experiencing here this morning as I saw this huge gap open this week. We see price closed around the 152.300, and we saw the market open around the 153.150 this morning. That's a massive gap of over close to 100 pips thereabout. And remember last week, Friday, during our Forex Morning Mastery, we had a beautiful setup we marked out. Let me show us here for those of us who are not part of that session, or a reminder for those who are part of the session. So if you remember vividly, on Friday we had this situation right here on the 4 hours time frame, where I don't know what happened to that line. I think we marked out this line around the 152.00 area. For those of you who are with me on my last week, remember we had a situation here around the 152.00, and I said I'm willing to buy for the fact that price action is staying above that ascending trend line, and the emergence of this reversal pattern for me is a very, very good sign. Though the market did not move very well that Friday, I had a position over the weekend, and just opening my account this morning, I saw the price had moved significantly to the upside. And for those of us who kept on or held on to those positions, well done, and kudos to you for staying faithful with our analytical approach. So going into the new week, I am not seeing any driver that will influence the Japanese yen positively, not any, at least in the meantime, as everything is projecting that the dollar will continue to rise, at least for the first half of the week, from rising U.S. Treasury bond yield to the strong U.S. economy, as this has reinforced expectation of smaller Fed rate cuts and fuels the US dollar rise against the yen. And of course, we also have the uncertainty surrounding the US elections. As we can see, there is a high concern over increased deficit spending after the US election, regardless of who wins, and this is contributing to the higher US Treasury bond yield, and of course dovetailing to a stronger US dollar. Now, over the night, between yesterday night and this morning, there was another new development, which not a good news from Japan, where the loss of the parliamentary majority for Japan's ruling coalition raises doubt about the Bank of Japan's ability to raise interest rates anytime soon, and this could further weaken the Japanese yen. And a generally positive risk tone in the market right now is definitely going to be hurting safe haven assets such as yen. Now, what do I mean by that? At this moment, because investors are feeling confident and optimistic about the markets, that is the positive risk tone, they might choose to invest in assets that carry more risk but potentially higher returns. So as a result, they are likely going to be selling off safe haven assets like the Japanese yen, which people usually buy when they are worried or cautious about the market. So I still believe that the yen will continue to lose value because investors are moving money to riskier investment at this point. Now, how do we translate all of these drivers into the chart? What is market participant doing? How are they digesting these drivers, and how are they anticipating this week's trading session, especially the last trading week for the month? So I didn't share any public video on the USDJPY, so I will be going into the higher time frame, the 4 hours time frame. Let's quickly have an holistic perspective into what is going on in this market. So what I did here on the 4 hours, hold on a second, I want to adjust something here. So going back into the 4 hours time frame, so what I did here was to take into account the character of price action since the beginning of this month. Let me zoom in so we can see things more clearly. Now look at what has been going on here since the beginning of the month. We have a trend line, an ascending trend line, which has been a resistant line. You can see we have higher highs around this area, and not until last week Wednesday we finally saw price break out of that trend line. Now, the retest of that structure was one of the major factors that made us to consider buying the USDJPY last week Friday, and this has led to price testing another high at the 153.880. Now, in addition to that trend line is my key level, which is situated at the 151.70. Now, this area here is also serving as our demand zone. Look at how beautifully it lines up on that ascending trend line, and at the end of the day became a platform to drive prices higher. Now, with the path of least resistance for the USDJPY being to the upside based on the market drivers we talked about earlier, what are the chances and what areas can we look out for buying opportunities today? And especially for those of us who missed out on that bullish opportunity we took on Friday, let's see if the market can give us a second chance to continue the uptrend. Now, with the situation we have here, theoretically speaking, we do expect that price may at some point want to come back, retest the neckline of that reversal pattern to continue the uptrend move. So is this bearish momentum we observing in the last 4-5 hours a signal that price is coming back to retest the structure before the uptrend happen, or will it evolve into an uptrend continuation pattern that will incite another wave of momentum from that particular area? Now, to help us have a clearer insight into this structure, we shall scale down into our execution time frame, which is the 1 hour time frame. Now, on the 1 hour time frame, this was what I was able to come up with. A little bit of consolidation happened during the first 4 hours of this morning. As you will see here, price was confined within the 153.245 and the 152.680, giving us a range bound structure. And you know, whenever we identify this kind of structure, we want to see price either break down the support line of the range to give us an opportunity to sell, or break out of the range to give us an opportunity to buy. Now, look at what has happened here. Price broke out of the structure during the Asian session, and it appears price is coming back to retest the structure to continue an uptrend move. So at this juncture, we are at a critical moment where it is very important that we exercise patience and wait for significant confirmations to happen before jumping into a buy or sell. Now, in addition to that structure there, you can see we have a trend line. After connecting this was going to be playing a significant role today, as depending on how price relate to this trend line will determine if we are buying or selling. So if price remains above this trend line, I will feel comfortable joining a buy. In fact, we can join a buy right now, and of course place our stop losses way below or closer to the support line of that range bound structure, dovetailing to about 30 to 50 pips of stop loss depending on where your entry point is. Then another perspective to this is, if you are that conscious, you can just place a buy stop order above the 153.245, have your stop loss below the trend line. That's about 35-40 pips of stop loss, and let's see if the momentum will continue to the upside. And if it does, we want to be adding more buy positions at the breakout of the 153.875. So this trend line here is going to be playing a significant role in guiding our trading decisions today. Now, in as much as we're looking out for bullish traction, we cannot ignore the potential that sellers could come in at any point in time, which for me could be considered to be a neckline at this point. Now, this is the neckline we identified earlier. That is the 152.00 area. Remember, we talked about this on the 4 hours time frame. Reversal setup, price breaks out of the neckline, and I mentioned that theoretically we expect that price may come back to retest the neckline in an attempt to continue the uptrend move. So if that is going to be the case here, then a breakdown of this ascending trend line could trigger that retracement back into that structure. Now, looking at the distance between that trend line and this one we are looking at about 90 pips. Now, for those who are willing to do short-term trading opportunities like scalpers and day traders, you may want to position yourself for this kind of opportunity, break down retest of the trend line, welcome selling ideas, and you could add more sell position at the breakdown of the 152.680 to maximize the potential of the bearish move. Well, for me, since I am not scalping the market, I am more of a swing trader. I will wait. If the price breaks down the trend line, I will just wait and see the price come back into the 152 area, where I will be looking out for reversal setups to join an uptrend continuation. So that is how we are going to be managing the USDJPY trade for today. Let's see how the market is going to play out. If anything new comes up, I will definitely give us an update on my Telegram platform. So that's my simple view there on the USDJPY. If you have found this content so far helpful in making your independent trading decisions, I really appreciate your support by giving the video a thumbs up. And for those of you who have clicked on the like button, thank you very much for your support. This is the cheapest way that you can actually support this community to grow. And thank you very much as you do so. So let's see if there are any questions whatsoever as regards to the current discussion. If there are none, then we move on to the final asset on our watch list. So I'll take some 10-15 seconds off and we shall come back to continue the session. Alright, so in the absence of no questions, I guess we are all on the same page. I hope you've marked out the structures accordingly. We will be needing them as a reference point to guide our independent trading decisions today. So with that said here, let's dive right into the final asset on our watch list for today. Stay tuned in. So the final asset we are looking at this morning is my favorite, the XAUUSD, popularly known as the gold spot. And what an interesting situation we have in this current market dynamic. We continue to see price find new record, break the previous record and find new highs, and continue to have a potential of even breaking more highs. And recently the market driver has been quite interesting, where the narrative presents a mixed picture, while geopolitical uncertainty and the US dollar, the strength in the US dollar, the geopolitical tensions and uncertainty in the political landscape in the US is pushing gold prices to the upside, while the strength of the US economy and higher treasury bond yield is counterbalancing this positive influence for gold. So it's a it's like market is in an indecision phase right now, and it's very important that we exercise caution and look out for significant confirmation before jumping into a particular direction. I did a top-down analysis on the XAUUSD during the weekend, so I will not be going into the higher time frame in this case. If you missed out on my weekend video on the XAUUSD, I encourage you to go ahead and watch it, as it will be able to have a background knowledge of how we got to this point, and in fact have an holistic understanding into what the current structure is. Now, based on the video I published during the weekend, it is quite clear that the market has been strongly bullish since the beginning of the month. And as a result of this, we have this beautiful ascending trend line you can see here. And as long as price remains above this trend line, it makes a lot of sense that we look out for structural details that will support an uptrend move. Now, in addition to that trend line is the fact that price action is sitting on a robust demand zone. Now, this is a zone that has been consistent with buying power in the last 2 weeks. So after price tested that all-time high record at the 2,759, you will see that price has been consolidating. We saw price drop down into that area, and look at what happened. Sellers were unable to break through. The same thing also happened here on Friday. Sellers were unable to break through. Now the question now is, will this be a platform that will drive price to new highs? Now, in order to answer this question, we have a structure marked out this morning while I was looking at the current market dynamics. So you can see here, since the new week has begun, the market has been going through a consolidation phase. As you will see, price is trapped within the 2,724 and the 2,740. So it's like a $16 range bound structure where buyers and sellers are struggling to gain some traction. Now, if we take into account the fundamental factors behind the scenes, like the geopolitical uncertainty in the Middle East, the US dollar the US dollar strength as a result of a strong US economy, and of course rate cut expectations. And in fact, we have a lot. We have the equity market, where a positive tone in equity market is diverting investment away from the gold commodity. So the factors behind the scenes are quite contradictory, and that is why we need to be very, very careful before jumping into any positions at this point. So with that being said, here we are going to be using this structural detail here to identify potential trading opportunities. And you know how we use our range bound structures. Of course, we want to see price action break out of the resistance line to give us an opportunity to buy, or price breaking down the support line to give us an opportunity to sell. But there is a little bit twist to this current range bound structure, and that is this ascending trend line that slices through that range bound structure. Now, this is going to be playing a significant role in guiding our trading decisions today. Now, what I want to do now is to watch how price is going to react to this trend line, which interestingly shares a confluence with that 2,730 area, a level which has been known to be a buying niche since this week began. So you can see since the week began, you can see how buyers have always taken over the market from here. We see a hammer candle here, and then we see what happened here again. Buy pressure comes in, and right now price action is back into the structure. Will buy pressure be maintained above this level, or will this level be breached and broken to the downside? So that is what we are looking forward to guide our decisions this morning. So like I did say, let me scale down into the 1 hour time frame. So I will scale this down into the 1 hour time frame, the 15 minutes time frame. We want to see if there is any structural detail around that 2,730 area to help us navigate the structure. So I will scale down into the 15 minutes time frame. So here we have the 15 minutes time frame, and this candle has about 18 seconds to mature to finish. So let's see how this candle is going to close. Is it going to close in form of a engulfing bearish candle, or a bullish candle, maybe a armor candle, whatever case it may be? So it closed in a bearish engulfing candle. So what this simply tells us is that price has sliced through both the ascending trend line and that level at the 2730. So what I want to see now is continued selling pressure below the structure for me to have a short-term selling opportunity. Now, to give a visual representation of what I mean, I want to see something like this: continued selling pressure maybe for the next 15 minutes or 30 minutes or so. If that's going to be the case, then I will be willing to join a sell. Then a breakdown retest of the 2720, our key level for this week, will welcome more selling ideas. Now, between that level and this level is about how many pips? That's about 100 pips thereabouts. And if price drops further, we could maximize the potential of the bearish move. Now, another thing I would like to mention here is, if this bearish move continues and as soon as price gets into the 2720, this is a crucial juncture. This area has been known to be a buying niche in the last 2 to 3 weeks. So if we sell and price gets into that area, kindly move your stop losses, secure some profit from the sell position, and let's wait to see how the market will react to the 2720. If I can see a reversal setup here, I will be joining the breakout of the neckline to continue that uptrend move. But if price breaks down the 2720, could trigger more selling ideas. So that is how we'll maintain a bearish bias on this one. So like I said, let me just give a visual representation here. So selling the breakdown retest of this particular structure. However, in as much as the structure at this moment is looking as if it wants to go bearish, we cannot ignore the potentials the buyers have in this market. We are talking about geopolitical tensions in the Middle East. We are talking about the uncertainty as regards to the upcoming US election, and rate cut expectations too as well is also going to be supporting the ascent of gold. Now, in this case scenario, what are the conditions we want to see on the chart that will make us feel comfortable buying the gold commodity? Now, what we will look out for is a reversal pattern here, and I'm beginning to see something that looks like an inverse head and shoulder, though it is not yet mature. If that is going to be the case, the breakout of the neckline will be a confirmation to join a bullish momentum. So we are not going to be buying unless we sight a reversal setup, and of course place our buy at the breakout retest of the neckline of that reversal pattern. So that is how we're going to join a bullish momentum if price evolves into a reversal setup. So the area between the 2734 and the 2728 is a crucial juncture. Let's wait and see how the market will react. Well, with an engulfing candle, I can still risk a sell from that area, and if it continues, I will move my stop loss accordingly to secure the position. But remember, we are not buying at this point unless a reversal setup is formed and the neckline is broken to the upside. So that is my simple view here on the XAUUSD for today. And if there is anything new, as always, I will be dropping some updates on both my TradingView and Telegram platform. And for the go challengers, you are going to be watching me scalp the gold market today. In the next 40 minutes or so, I will be on the go platform where we shall be scalping this market together. So you don't want to miss out on that session, go challengers, and I look forward to seeing you there. So if you have any questions whatsoever, feel free to let me know in the comment section. I will take the next 5-10 seconds off before we start rounding off on today's Forex Morning Mastery. Okay, so I see your comment, Wapana OC, good morning to you. Wapana is asking, how do I join the Telegram channel? Well, it's easy. just look at the bottom of your screen. The wording scrolling at the bottom of your screen will give you a username that you can type into your Telegram platform to join the channel. And if you cannot use that, we have a link of the Telegram channel right in the description box of this current video. So go ahead and check it, click on that link, and it will take you to the channel. I hope I answered you there, Wapana, and you're very much welcome to the Forex market community. Good morning to you too, Wapana. All right. So I guess in the absence of no questions, we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. Last week was very fruitful, and I'm hopeful that this week will be the same, if not even better than the previous week. This week is the last trading week for this month, and of course we have some very, very impactful event coming up later in the week that could change the course of market dynamics, giving us some strong volatile moves that we can actually bank on to lock in for this month. So we were able to take on all the three financial assets we are monitoring for this week, which includes the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate the market dynamics. And I do hope you marked them out. If you did, well done, kudos to you. So all we just need to do right now is exercise patience and allow the structures to mature. And for those of you who missed out on the session, well, the video, the replay is available after the session, so you can easily go back and check it. They are duly timestamped, and you can navigate to whichever asset is of your interest. So it's on this note, I would like to wish us all the best of luck today. And that reminds me, for those who are joining us for the first time, I do hope you are able to gain one or two things from what we have discussed today. If you did, you want to be part of our subsequent editions. The next one is on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have done so far, and of course prepare for the second half of the week. While looking at the chart, I can see that buy pressure is resuming again. So at this point, you can place a sell stop order below the 2,730 and stop losses above the 2,733, giving enough breathing space for price action to move around. So I see your comment, Wapana. Thank you for all the knowledge you're sharing with us for free. God bless you too. I'm glad you find them very useful. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.